Many of you have asked for my views on Bitcoin, so here you go. And I'm not just going to give you my prediction, I'm going to go through what predictions to believe and which to ignore. First, here's a prediction from 6 months ago. This is the June crypto report, and it predicts Bitcoin's future price based on Irving Fisher's equation of exchange. Back in June, Bitcoin's price was around $9,000, and the report predicted it would hit close to $20,000 by the end of the year and $398,000 by 2030. Well, here we are at year end, and sure enough, Bitcoin is now up at around $20,000. But the report is actually much more precise than that. And in this chart, you can see it predicts 19,044, along with predictions of all the top cryptocurrencies through to 2033. So can we believe this, or is it just another lucky coincidence? Well, I believe it, and I'm going to tell you why. And to save you the trouble of reading the whole report, it's based on the quantity theory of money, supply and demand. In any monetary system, if you double the supply, you halve the price. And if you double the demand, you double the price. The equation of exchange, MV equals PQ, is something every entrepreneur and investor should know. And if you're interested in how it works, I'll explain that at the end. But the point is, all prediction systems are based on variables, whether it's predicting the weather, predicting what's going on in your business, or predicting the price of Bitcoin. It's hard enough predicting what's going on in your business. Imagine trying to predict the money in an economy. But in Bitcoin's case, it's actually easier because we know what the supply is, which means we only really need to focus at predicting the likely demand. And that's the key to any prediction: cut down as many variables as possible. And in Bitcoin's case, it's not just the crypto report that's been going through this exercise. Some investors predict Bitcoin to hit $100,000 in a year. Citibank analyst says Bitcoin could hit $318,000 by 2021. The Winklevoss twins say Bitcoin will soar to $500,000 and surpass gold as a store of value. Bitcoin will surge to $1 million in 5 years by an enormous wall of money, former Goldman Sachs hedge fund chief says. These institutional investors are not just making some wild guess. They're using prediction models that need to be backed up with data. And the reason I'm going along with these predictions is because we're seeing the data play out in real time. We know on the supply side, there's just 21 million Bitcoin that can ever be mined. And on the demand side, there's two big waves that are taking place right now. The first one is the institutional wave of money that's now flowing into Bitcoin. JP Morgan says gold will suffer long term as institutional investors gain Bitcoin exposure. Record $15 billion worth of cryptos under management after institutional investors pump 421 million in 1 week. And by the way, that was this week. Grayscale buys almost $140 million in Bitcoin in 24 hours. So while the bubble a few years ago was driven by retail investors, we're now seeing a whole wave that's being driven by institutional investors. The analysts, strategists, and hedge fund managers that they follow are the ones that are the best at predicting. And many of the top ones have now become very vocal about Bitcoin. I've changed my mind. A top market strategist and longtime crypto skeptic explains why he now believes Bitcoin should be in investor portfolios. Bitcoin's massive rally is different from the speculative frenzy of 2017 as more institutional investors buy in, says Mike Novogratz. Bridgewater's Ray Dalio's softened stance on Bitcoin says it has a place in investors' portfolios. Paul Tudor Jones buys Bitcoin as a hedge against inflation. Bitcoin eyes 20,000 breakout as Morgan Stanley predicts dollar crash. What's going on right now has as much to do with predictions on the US dollar going down as it does on Bitcoin going up. Paul Tudor Jones runs a $22 billion hedge fund, and he shared these two graphs of what happened to gold in the 1970s compared to what's going on with Bitcoin today. In his latest market outlook, he called the great monetary inflation. He said the best profit maximizing strategy is to own the fastest horse. If I am forced to forecast, my bet is it will be Bitcoin. The second big shift in the demand side of the equation is that Bitcoin and cryptocurrency is finally being accepted as a means of exchange. In October, PayPal started accepting Bitcoin along with Ethereum, Litecoin, and Bitcoin Cash. And what has that led to? 26 million PayPal merchants to accept cryptocurrency. Within a month, almost 20% of PayPal users have used the app to trade Bitcoin. And they're not the only ones. Square buys $50 million in Bitcoin as part of a larger investment in cryptocurrency. And in this article, hedge fund Pantera Capital estimate that Square clients have accounted for 40% of all Bitcoin that's entered the market in the last 2 years. And within 3 weeks, PayPal clients were already buying roughly 70% of the new supply of Bitcoin. It's having a significant increase on price. You bring two corporates that are already buying all of the newly issued Bitcoins, supply and demand says the price has to go up. Yes, there will be ups and downs, but demand will not slow down unless governments start making Bitcoin illegal, which I frankly think is just too late for that. So if I invested in Bitcoin, actually I invested way back when it was around about $1,000, and then I sold about $2,000 and missed the entire run up. But just by understanding the dynamics of what's going on with digital currencies, after the crash, when it went right down to $4,000, I started buying again. And while in the first round I was investing in the tens of thousands, I'm now investing in the hundreds of thousands. And it's not just Bitcoin. Bitcoin's rise and dollar's fall is actually helping all cryptocurrencies. I think it is inevitable as we move more and more into online economies, we're going to be using digital currency. I mean, why wouldn't you if there's far less transfer cost and transfer time compared to fiat currencies? Every online game, online world already had their own digital currency. In fact, in our edtech company, Genius U, we're turning education credits into its own digital currency. So instead of getting into student debt, when you are learning, you're actually earning at the same time. And then you can spend those credits you've earned on more training, mentoring, and resources. So should you invest in Bitcoin or even start up your own digital currency? Well, that's up to you. But the bottom line of how I look at something like this, number one, when I'm looking at predictions, I look at how many variables are involved. In Bitcoin's case, the only variable really is demand. And to me, it's pretty safe to say demand will keep on growing at least in the short term. And if you've stuck around to understand Irving Fisher's equation of exchange, it's an equation every good investor and every government uses to predict the dynamics in the monetary system. MV equals PQ, where M is the amount of money, V is the velocity of money, P is the price of goods, and Q is the total quantity of goods transacted in the market. So in simplest terms, if you either double the supply of money or the velocity of money, you'll halve the value of the money. And if you halve either the supply of money or the velocity of money, you'll double the value of the money. And similarly, if you double the quantity of transactions, you'll also double the value of the money. In fact, all value and price in any economic system, whether it is an entire economy, whether it's your business, or whether it's like the employment market, is based on the value and what someone's willing to pay directly related to supply, demand, and velocity. I'll leave some links to some videos down below which explain this really well. So if you're interested, go have a look. And if you enjoyed this video, please do give it a like so that it gets out to more people. Subscribe to keep up with the latest in what's going on with this new economy we're moving into. Thanks for watching, and I'll see you on the next episode.